Hello and welcome to episode 12 of the Gold, Goats, and Guns podcast. My name is Tom Luongo. It is Saturday, June 3rd, 2017. So, we'll never have Paris. All right, let's get right to it. So, two big things that I want to talk about today. Trump and the pulling out of the Paris climate change agreement. Comey's testimony this week is going to be very interesting. And then the fact that because Trump is under fire, the markets are creating a short dollar trade, which I think is overdone, and has got every major market up except the dollar, which tells there wasn't even a safe haven trade on Friday. It was everything's bad for the dollar, which didn't make any sense whatsoever. That stocks would be up, gold would be up, silver would be up, Bitcoin would be up, treasuries are up, European stocks are up, European bonds are up, the euro is up, the yen is up, everything's up, but the dollar's down. So what likely happened here was a massive liquidity dump by the Federal Reserve to push the dollar down. And if you want my honest opinion, it's for selfish reasons. It's to give the Fed all the cover that they need to raise rates in 2 weeks. They wanted a weak dollar and a rising stock market, and especially on poor economic data. We had poor employment data on Friday. So, all right, but let's go back and let's talk about the gloriousness of Trump's refusal to continue the nonsense that is the Paris Accord on climate change, which ultimately is not even a treaty. It's mostly an agreement amongst world leaders, mostly the G7, to agree to do these, abide by these rules and do these things, and in order to cut carbon emissions, which is stupid, it's moronic. And I'm sorry if the two leftists who actually would tune into this podcast are now to give me a chance, and you are angry that I just called CO2-induced global warming stupid. It's because it is. It's the dumbest thing I've ever heard. And I've said this before, and I will say it again, and I will proudly say it in any form that I can come up with. It's dumb. The only thing that's cost us more lives in post-World War II is the Lipid hypothesis. So, in misallocated capital to industries that had no business attracting the level of capital that it has, and big pharma, the medical industry, and green energy are the three big ones. All right, but enough of that. So Trump just put the kibosh on the beginnings of that. And what I love about this is that, and I love the response from this actually, because I really feel very strongly that if you feel that strongly about man-made global warming from all the CO2 that we're pumping into the atmosphere, then you should voluntarily change your behavior. And I have no problem with people who individually, and even communities that agree wholeheartedly, and I mean wholeheartedly, I mean unanimously agree to alter their behavior, their manufacturing methods, and that goes for companies too, their manufacturing methods or anything else. If you decide as the sole owner or shareholder of a company to alter your company's behavior or your personal behavior in service of CO2-induced man-made global warming, bonsai, more power to you. Just don't make the rest of us go along with you. You're doing your part for the planet. I'm doing my part. I think the sun's going into remission, and I'm burning wood in my house in the wintertime and hoping for global cooling in order to put more CO2 in the atmosphere to insulate the Earth against it getting really freaking cold. I'm also rational enough to understand that I'm not that worried about there being too much heat in the universe. Regardless of that interjection of thermodynamics, the truth is that what Trump did on this week, on Thursday, was historic. Because it really does create, I think, peak global warming and in many ways peak transnational globalism. He's pulled us out of the TPP. He's pulled us out of the TTP-IP or TTIP. He's pulled us out of the Paris Accord. He's going to force a renegotiation of NAFTA. Okay. that changes the way this changes the global economic dynamic. It does. And I loved Putin's comments on this as well, which is that, this is an agreement that's not even supposed to come into effect until 2021. We haven't even discussed the actual parameters of it yet at this point. It just gives us another 5 years to decide what we should do. And this is coming from Putin, who is very lukewarm on the concept of global warming. He's got it's mostly Russian scientists that are arguing for the sun going into hibernation and a mini ice age on the way. So Putin's very aware of this stuff. He's very aware of the other side of the argument, because in Russia they actually talk about both sides of it. The people who are not on the politically correct side are not called deniers. They're not shouted down like a bunch of scarlet letter wearing heretics. They actually talk about things rationally. But they're Russian. It's what they do. We're European. And this is what we do. All right. So this is all very good. Ultimately, I think it's very good for the United States. It's very good. It creates a very good signal long term that our manufacturing and everything else is going to be more competitive. The Europeans are going to respond by threatening more protectionism that they can't afford. So in my mind, and my read on this, but the markets are currently doing something different than I think. Well, obviously, I think they should be, but it could be because I'm wrong. But if I'm right about all of this, then this move in the euro and the yen and the dollar itself, they're all false moves, and they need a little bit more time to play out. Maybe another 2 weeks until the FOMC's rate hike decision. It may take even longer than that. It may take until September. And we may actually see a move in the euro to $1.16. And the Singapore dollar down to $1.35. And the Thai baht down another 2 points. And, you think that do you think Singapore or Thailand or Vietnam or do you think they can afford a 7 to 8% appreciation? Malaysia can afford a 7% appreciation of their currencies currently? What about Mexico? You think Mexico can handle? Mexico's gotten hammered, right? But you understand what I'm saying. The commodity currencies, the Canadian dollar, the Australian dollar, they're not responding to this at all. They're putting in they're still in bear markets, and they're still in bear trends. Certainly the Canadian dollar is. And that's with massive capital inflow into their housing market. That's how bad the Canadian dollar is. And that's with oil at $55 or $50 a barrel, right? The one commodity currency that's in a true bull market at this point is the Russian ruble. So, and Putin had some strong words for Megyn Kelly this week at the St. Petersburg Economic Forum, where he said, no, actually, the sanctions don't bother me at all. It forced us to use our brains and not rely on oil and gas revenues. He had a lot of other strong words for Megyn Kelly. I can't wait for the interview tomorrow night. That one's going to be a hot time in the old town. What I saw in the roundtable discussion this afternoon, wow! I watched some of that. Wow, he just crushed her and shamed, and she just the look of shame on her face for having asked these dumb questions of this man was quite impressive. Okay, so everything's up. The dollar's down. That's the way it is right now. I'm wondering if it was a design thing and a short-term thing. We'll see how this plays out early in the week. Let's talk about Comey's testimony. So earlier in the week, I watched an episode of the Still Report. If you don't follow Bill Still, his reports are very interesting. You can find him on YouTube. And he had a timeline breakdown that was given to him by someone else. And I don't remember the guy's name, and I don't really care. But it was a very interesting 25 minutes worth of breakdown of Jim Comey's career up until today. And understand that Comey's going to testify this week, but he's doing so probably with a game plan to do as much damage to Trump as possible, but still not ultimately incriminate himself. Well, that's one possible plan. The other possible plan is that he's going up there to fall on a sword for the Clintons and Schumer and McCain and everybody else that he's been covering for. because he's botched on purpose every investigation into Hillary Clinton and the DNC and the hacking and everything else by inserting himself where he wasn't supposed to be, and by giving immunity out left and right to people and everything, and all of it. Jim Comey has been running interference for the Clintons since Whitewater. And this is either going to be the end. His career is over. So now the question is going to be whether or not he goes down with the good ship Clinton on behalf of the good ship Clintons as the fall guy, and does so this week at his testimony in front of the Senate, or continues to try and play this game, drag this out a little bit longer so they can try one last attempt to garner enough forces to actually impeach Trump in the next couple of weeks. Because if they don't impeach Trump in the next couple of weeks, let's harken back to when Comey was fired. He was fired while he found out he was fired while giving a speech out in LA by looking over his shoulder and seeing CNN reporting that he was fired. Meaning Trump didn't tell anyone that what was going to happen. And only Trump and a very few people knew that what they were up to, which was to hand the letter in as they walked into the FBI and then walk right up to Comey's office and lock the whole thing down and scour everything out of there and hand it all to Jeff Sessions. And if that's the case, if that's what actually happened, then they've got Comey dead to rights. And it's only a matter of time before everything, all the pieces start to fall together. And a paper trail can be, and a paper trail of everything, and all of his obstruction can be laid out, and all of the implications of that. They're on a clock now. If that's correct, they're on a clock. That means that they have to impeach Trump soon, or they'll lose their window because they're all going to jail. Because Sessions will start handing out indictments. Remember, he's got an assistant AG now. It's all going to be done, and it's all going to be done under the auspice of an interim FBI director that Trump can appoint. And Trump can appoint someone loyal to him to start the process. Because the next real FBI director will have to be politically negotiated. There's risk there. Now, you think of this like a freaking spy novel, for Christ's sake, because that's exactly what's happening. It's all food for thought. Okay, so let's watch Comey's testimony very carefully this week to see how it shakes out. But if he does not roll over for the Clintons and admit to obstructing justice and everything else, and basically incriminating himself, then this is going to get very interesting. All right, let's get to the charts. All right, let's look at gold. So we had a very, very strong week in gold. Like I said, the close on Friday was very strong because of the poor employment report, the poor labor report. We saw the same thing in silver, and silver followed. I'll show you the silver chart in a second. Silver just followed through on last week's breakout above 1729. But the gold, when you have something I want to talk about, because I don't talk about this much because I rarely talk about trends. I usually just talk about where I think the reversals are going to happen. But let's look at why gold was able to best this 1272.40 area that took 3 weeks to get to, and looked twice and tried twice, multiple times on a daily basis to breach it and couldn't do so, and then finally did. It closed very strongly last week. There's this very short tail here above. So the opening price, the closing price, the difference in the closing price and the high is very, very small. So you're going to open very close to that closing price, and there's the open. The different distance between the open here and this high is very small, and that sets up a high probability that you're going to get a break of that previous week's high. So when that happens, right, that in and of itself is always the first bit of resistance in any time period, be it a day or an hour or anything else. Now, whether that break is significant or not, you have to look at the rest of the context of the chart. But just looking at those two bars, very important. So if you can break the previous high, it gives you now the opportunity to say, okay, now we're going to move higher. How much higher? I don't know. Let's go look at the rest of the trading statistics and see what the average weekly move is. And then go, oh, well, then maybe there's 85 cents here. Okay, cool. Or there's $5 here, or there's $12 here, or whatever it is. But what it really means is that this previous low here is your floor for the week, is what that means. Because the probability of breaking both the previous high and the previous low within a time period is usually pretty short. Really pretty small. it's at most 15% of the time. And that's a very volatile size. Like gold is right around 15, 16% for what I call an engulfing bar, where you break both the high and the low of the previous bar. So the range of this week's range is larger on the top and the bottom than the previous week's range, right? So, and then, and those like inside bars where you break neither the previous high nor the previous low are usually reversal signal, are usually tightening patterns before reversal signals, inside bars, or engulfing signals are radical departures and changes in trend, right? Because, everything's trading normally and then someone rams a plane into the World Trade Center and boom, we get an engulfing bar in the wrong direction because we were breaking to new highs and then the markets crashed, right? And some dramatic event usually is what it takes to get an engulfing bar. Not always. I mean, here's one right here, right? So we had this nice, beautiful uptrend, and then we got a high, and then boom, the shorts came in, and we closed. Not only did we get an engulfing bar, we got a reversal signal right here, right? Because we closed below this low. So this is a 1 bar bearish engulfing reversal. It's a crazy bad signal. We got a huge move down the next week, and then we got an inside bar. Oop, look, and then we got a 2-bar reversal. 1, 2, we closed above this bar. There was a nice inside bar here because we didn't break this previous low. We retested it and then closed very strongly, and then there was a high probability we'd move higher, and we did. And then boom, another 5-week uptrend. So this is all very strong. But while trading these weeks, this was kind of scary. And then the minute we didn't break this low, this was, giving you some idea that, wow, okay, at the end of this week, I would have almost gone long gold here. This is the high probability bet you can go long gold there. So the same kind of thing was here. You had happen here. You didn't have a lot. It didn't take a lot to move the price higher. And then we got events during the week, news that pushed the price higher. So we got the same setup this week, where there's a very short tail here, which gives us an opportunity to attack 1297.40. Okay, because gold moving $20 in a week is not untoward. It happened last week. Happened the week before. We got $30 a week before that. $40 a week before that. We got $20. I don't remember. I think it's like $27. I think it's the average move for gold on a weekly basis. So, absolutely, we can see a move to 1297. Now, if we don't see much of a move beyond that, that might be an opportunity. That might be an opportunity to say, okay, maybe this uptrend is nearly over. A 5-week uptrend in gold is a long one. So we had a 5 here. This is a 4. This is a 4. Right before we get a down bar. 4 bars up, 2 bars down, 4 bars up, 3 bars down, 4 bars up. Maybe one more. There's going to be a couple of down bars. So this area around 1300, and gold likes to trade around the round numbers anyway. So this area around 1300, probably a good opportunity to put a hedge on if you're long gold or gold mining shares. You might have to lift that hedge immediately after that if it breaks to 1310, which is what I would suggest. But this is an opportunity to put a good hedge on in case of a move downward, like a reversal in the dollar, right? That the dollar finds its footing, right? And that's that. So because we still need to see a weekly close, certainly a daily close above 113.02 on the euro, to really feel like we've got an opportunity for even more of a rally in the euro. And that's really what's driving a lot of this at this point. Okay. All right. And, the globalists are losing battles to Trump left and right. You don't think they're trying to make the euro look strong? I don't think they're goosing the markets a little bit. Remember, the Fed wants a cheap dollar and a rising stock market in order to raise interest rates into a recession. The narrative fits. At some point, that will reverse. Once the rate hike is in, the Fed's not going to care. I bet you it shows up in the monetary systems. I have a high probability of that coming out. That in my back of my head. It may not, but that's, to me, I'm giving 3-2 odds on that one. All right. So silver broke above this. Remember, now the thing about gold here is that it took 3-4 bars to finally break the range of this bar. That's not a particularly strong signal. So this rally doesn't have a lot of legs. Silver accomplished the same task in 3 bars. Again, a 3-bar reversal is not really a reversal. It's just a new uptrend. One could argue that this is actually your last down bar and this was a reversal signal, but I'm not a big fan of that. I like to be a purist about it and just go, look, this is an up bar, this is an up bar. That's what we got to climb. That's what we got to best within 2 bars. We don't do it. It's not a strong reversal signal. So there we are here. We closed at 17.33 last week. We needed the best 17.29, and then we just got followed through because of a nice short tail on the top side. We broke higher. Silver actually traded down low this week, retested the low, noticed that it couldn't attack the low from the previous week, and we just moving higher. So this is a good solid uptrend in silver. But again, 4 weeks, 3 weeks, bullish engulfing bar that eventually gets crushed with this massive. Silver was set up here to go to $20, and then it got crushed. And a lot of people are crying foul in the gold and silver commentary space, saying that it was manipulation. There was maybe Noble Group was going under and needed to liquidate. Yada yada yada. There's all sorts of stuff like that. But whatever. At the end of the day, silver's got a 4-week uptrend here. We may get one more, move to $18, and then you'll probably, again, 18 looks like a good space to short for a move back to maybe 17 or 16.50, and then maybe we'll move higher. We'll see. But 18 here would be, if this reverses before it gets to 18.72, this is now a well-defined downtrend. Up, down, down, right? This is a well-defined downtrend on the weekly chart. Silver's still kind of bearish, even though it looks strong here. Okay. All right, now let's talk about Bitcoin. There is nothing complicated about the Bitcoin chart at all. We got a blow-off top last week at 27.50 and 27.40. Huge moves to the downside for 3 days. Huge volatility. Put in a spike low here, around $1,900. Immediately, this is a daily chart, by the way. So this is 3 bad days. And then we got huge volatility here with a spike low, and then we start moving higher. And then 4 days worth of consolidation, including coiling. Note, inside bar. I mentioned this in my last 2 podcasts. And then boom, off to the races. You broke above this level here, boom, you're off to the races. And this is today's bar. This could easily close to $2,600 today, which then puts $2,650 and $2,740 into play. Bitcoin looks for all the world like it's going to go to 3,000 from here, if not higher. We may see another blow-off peak between 3,500 and 4,000. If the dollar stays weak, Bitcoin's going to continue to explosively move to the upside, along with all the rest of the cryptocurrencies. Okay? Mark my words. That's what the chart's saying. If you looked at the weekly chart and the monthly chart, you'd see it. The weekly chart used to look like it had this big, huge tail that was a reversal signal. It never even threw a weekly reversal signal. It's crazy how strong, how bullish the Bitcoin charts are. It's crazy. Okay? So that's pretty much what I've got for this time. So tomorrow night, I will be on with Steph McWilliams on her doing a live chat on her Right Millennial podcast. It'll be awesome, but we're going to talk about feminism. We're not going to talk about markets much. We're going to talk about feminism and Wonder Woman and all that kind of stuff because I'm going to put my geek hat on. It'll still look like my normal hat, my normal goat wrangling hat, but it'll be my anti-feminism hat, and I'm going to educate Steph about the greatness of comic books, and how the Wonder Woman film was actually not the evil feminist mighty vagina fest that it could have been. Very refreshingly, to be honest with you. So, very good movie for if you've got young girls, you should take them to see Wonder Woman immediately. My daughter was like riveted. I've watched her in many movies, and she's 11 now, and we've gone to the movies together, and she sat there like sitting forward and eating her Reese's Pieces and just riveted on the screen. I just turned to Camille and just poked her. So it's like, I know. It was great. So, really had a good time with it, and so I was very, very impressed. Not just as a political statement or anything else, but well-designed film from top to bottom. I'm a huge film fan. I'm should have been a film critic in a different life, and from my perspective, really well put together, really well thought out, and a very good time and well worth your money. All right, so there we go. Short movie review along with the market stuff. If you've tuned out, you've tuned out. All right, you guys have a great weekend. Keep your stick on the ice.